Folks, welcome to the show. It's Mad Money time. Tonight, we tackle a big one. Crypto trading or traditional trading. Which one is for you? Where's the real money hiding? Let's dig in and find out. Everyone's buzzing about crypto. Bitcoin, Ethereum, even Doge. To the moon, they all scream. But what about good old stocks? Think Apple, Google, Ford, companies you actually know. Companies that make real things. Don't count them out. It's a jungle out there, people. So many choices, so confusing. You need a clear guide. That's why I'm here. We'll cut through the nonsense, get straight to the hard facts. Buckle up, investors. We're diving deep tonight. First up, let's talk traditional trading. This is where it all began, the foundation of modern finance. This is the old school, the classic. Think Wall Street with its bustling trading floors and iconic stock tickers. You're buying stocks, shares in actual companies, or bonds or commodities. These are tangible assets tied to real-world entities. Gold, oil, even corn. Real stuff. These commodities have intrinsic value and are essential to various industries. When you buy a stock, you own a tiny piece of that company. It's a stake in their future success. If the company does well, your stock price usually goes up. This means potential profits for you. That's money in your bank. It's about real businesses. Real products, real services, real profits. The traditional market is deeply rooted in the physical economy. Now let's switch gears to crypto trading. This is a whole new world, a digital revolution. This is the new kid on the block, the digital Wild West. Bitcoin is the king. It was the first cryptocurrency and remains the most well-known. But there are thousands more now. Altcoins, they call them. It's all completely digital. Each with its own unique features and uses. No physical coins to hold. Just digital representations of value, just lines of code on computers. Crypto runs on blockchain. This technology ensures security and transparency. It's basically a digital ledger. It's decentralized, meaning no single entity controls it. You trade these digital coins hoping the price goes way up. It's a high-risk, high-reward game, driven by market speculation and technological advancements. Alright, let's talk complexity. Traditional trading has its rules. You often need brokers. You deal with regulated markets. Information is everywhere. Analysts, company reports, financial news. Study up. Then there's crypto. It can seem simpler to start. Download an app, click, buy coins. Easy peasy, right? Not so fast. Understanding the underlying technology? That can feel like getting a PhD. You must do your homework. No excuses. Risks. Traditional markets definitely have risk. Stocks go down, recessions can hit hard, good companies can sometimes fail. But there are some safeguards, regulations, investor protection agencies. Diversification is your friend here. Crypto risks, sky-high volatility, scams, exchange hacks. Your money can vanish. The rewards, they can be huge, but the losses can be total. Section 4. Riding the roller coaster volatility in crypto versus stability in stocks. Volatility, it simply means price swings. These swings can be minor or major and they can happen in any market. Traditional assets like your stocks have volatility, but it's often more controlled and predictable. A solid stock might move 2% a day. This is considered a normal fluctuation in the stock market. Maybe 5% on some really big news, but these movements are usually based on tangible events or earnings reports. But it's usually a manageable one. More predictable. Investors can often anticipate these changes. Now let's talk crypto volatility. This is a whole different ballgame. This isn't just a ride, people. It's a wild, unpredictable journey. It's a rocket launch to the moon. Prices can skyrocket in a matter of minutes, and sometimes a fiery crash landing. The same speed can bring it crashing down. Bitcoin can jump 10% in a day, or drop 20% in a few hours. This kind of volatility is extreme. Those smaller coins, even wilder, up 100%, then down 50%. It's stomach-churning, thrilling stuff. The swings are massive and can be very stressful, not for the faint of heart. It requires a strong stomach and a high-risk tolerance. Why is crypto so volatile? There are several reasons behind this. Well, crypto is much newer, smaller markets, there's less trading history, more speculation. This makes it more susceptible to rapid changes. News, random tweets, internet rumors, these can have a huge impact on prices. They can send prices flying or crashing down hard. The market reacts quickly to any information. It's often driven by pure sentiment. Emotions play a big role in the crypto market, making it highly unpredictable. Section 5, big wins and epic fails, real stories from the trading trenches. Let's hear some real stories now. Real people investing real money, traditional trading success, easy. But it's not always a smooth ride. Think of the master, Warren Buffett, the man who needs no introduction in the world of finance, the Oracle of Omaha himself. He bought Coca-Cola, he bought Apple, held them for decades. His strategy? Simple yet profound. Patience, made billions and billions. Slowly, surely, it's a testament to the power of long-term investing. Patience often pays, my friends. It's a marathon, not a sprint. The rewards come to those who wait, but there are epic failures too. The market can be unforgiving. Remember the dot-com bubble? Oof, pets.com, Webvan, names that haunt investors. They had great ideas maybe, innovations that seemed promising, but they were often bad businesses. Investors lost absolute fortunes. Dreams shattered overnight. Tragic. Overnight millionaires became broke again. The fall from grace was swift and brutal. Hype can seriously burn you bad. Beware of the allure of quick riches. Don't just chase those shiny objects. Look under the hood. Understand what you're investing in. Crypto success stories? Oh yeah, they're the talk of the town. You hear them whispered all the time. Those early Bitcoin adopters, the ones who took a chance. Legends. They bought it for mere pennies. Now they're millionaires, some billionaires. Their stories inspire and caution us all. Section 6. Getting started, your first steps into the trading arena. So, are you ready to dip your toe in? For traditional trading, here's the plan. Open up a brokerage account. There are many good ones, online, easy. Maybe start with ETFs. Good idea. Exchange traded funds. They're diversified. Simpler for beginners. Research companies that you actually like. Understand their business model first. Homework, homework, homework. Education is key. Non-negotiable. Read books. Watch financial news. Learn about company valuation. Don't ever invest money you can't lose, especially when you're just starting out. Start small. Be patient with it. Think for the long term.